Thanks for tuning into this earnings conversation with JSW Energy. The numbers, you would argue, were a mixed bag. Revenues compared to Bloomberg estimates were at 2387 odd crores. The estimates were about 2711 crores. The net profit, adjusted profit, would have been slightly lower compared to estimates as well. But when you include the other income, it was much better than what the street was working with. The street has rewarded the performance in Q2 after what was a fairly heady Q1 as well. Let's get in Prashant Jain to talk about how he thought the quarter and the first half has gone by, and how does all of this lead into a very important second half, if you will. Prashant, good having you. Thanks for joining in. And at the onset, to you and your team, wishing you a very happy new Samvat.
Thank you, and Neeraj, and a very happy Diwali and happy New Year to you as well as all your viewers. So, the quarter gone by has been very interesting quarter. The demand had moderated in the Q2. The power demand grew at 5.7% as compared to 18% power demand growth in the Q1 of the current fiscal. And the similar trend we saw in the merchant volume also. And merchant volume came down by 20% year on year. And also the power prices were moderated. Although the thermal coal prices remain elevated. And because of elevated thermal coal prices, our fuel prices remain elevated. And as you know, in our long-term business, the fuel prices totally pass through. So when your fuel prices pass through, your margin contraction will be seen as a percentage of sales. However, on an absolute margin basis, you are doing pretty good. And our long-term sales were also doing pretty well. That's why our EBITDA was 2% higher as compared to last year. And whereas the margin was contracted. So that was the one reason. Second thing is that the current quarter, the merchant business did not do as good as it did in the previous quarter. Year on year, it was almost okay, but on a sequential quarter basis, it was not as good as what we did in Q1 of the fiscal. But that power demand is growing well, and incrementally, whatever we are doing, that is also is falling in place. So that's why we are quite optimistic about our business, and we are happy with the performance.
Okay, and I'll come to those points as well. Just a couple of follow-ups onto the first answer that you've given. Now, 2 or 3 things. I thought generation of power, I believe YOY down about 2%, merchant demand weak, and if I'm not wrong, exchange prices dropped quarter on quarter as well in Q2. One would have thought this was a perfect storm. Now my question is this kind of are the pressures ebbing, if you will? Because what I did read is that at least exchange prices have continued to go lower in October as well. So can you give us a sense of what's happening on ground? When can it show some signs of change?
So our generation went down primarily because of one unit of 300 megawatt which was under maintenance. So because a long-term sales contracted unit which was under maintenance, you could not supply power, but it is a annual shutdown, and it's a normal situation in the power plant. So on a long-term sales on a year average basis, our volume will be higher. Okay, so excluding that 300 megawatt unit, the sales was on a higher side. Of course, the merchant volume went down, but it is moving as per the business plan and what we can anticipate. Going forward, I think the merchant volumes and prices are okay. The current prices are also approximately 5 rupees on an average, and the peak prices are hovering around 12 rupees. But the challenge is the fuel prices, because the coal prices are still very, very elevated. And we are having our thermal power plant based on the imported coal. So imported coal basis also, even if we are buying from Russia, the prices are fuel prices in the range of 5 rupees to 6 rupees. So you are able to sell power only in those time blocks where the power prices are more than the fuel price. And that's the challenge with the open merchant capacity what we are having. And that's why we are we don't see that there is a linear behavior in the merchant market, and so is the contribution from our side. So that's why we like only the long term purchase market, and then we want to contract our open capacity on a PPA basis.
I believe the PLFs also would have come off a little bit in Q2, as per what I read across most power plants, not just for you, I think, for a bunch of other companies as well. Now, my question is based on how you assess the demand supply. I mean, corporate commentary from a bunch of companies who are now talking about how they expect their capacity utilization levels in various industries to inch up. Consumer demand seems to be picking up, maybe not in rural as much, but the commentary again from FMCG companies seems to suggest that they see buoyancy as far as the second half goes in the rural markets as well. How do you anticipate the second half to be vis-a-vis the first half on most of these counts? Not just for you, Prashant. I'm asking you to comment as an industry captain.
So generally, there will be a little moderation in the demand because the Q1 was exceptionally good. We saw power demand growth was 18%. You saw that Q1 GDP was 13% growth. So for the year as an average also, the RBI forecast is 7%. IMF is talking 6.5% GDP growth for the country. So that means you are going to see moderation in GDP numbers in Q2, Q3, Q4. And that's how it will be averaging out. And the similar trend you saw in power demand also. Q1, 18% demand growth. Q2, it was 5.7. And I'm expecting, and H1, it was 12% power demand growth. I'm expecting we will be closing the year with 7 to 8%. And so that's what you are going to see. So there will be a moderation in the power demand growth in the second half. But as a whole, you will be doing 1:1, 1:1.2 times GDP to power demand elasticity. If GDP is going to grow 7% as forecasted by RBI, I'm quite certain that the power demand growth will be between 7 to 8.5%, something like that. So that's what the trend which you are going to see going forward.
Okay. Now, while I didn't get a chance to ask this to you when we did the summit, but in an interview before, when you did the acquisition, right, you had spoken about, I mean, that's one landmark deal, and you'd spoken about how FY23 could continue to remain a year of you making inorganic moves. And please correct me if I'm wrong, but I think that's what you had said as per the best of my memory. Now, please tell me, how does this scale up continue? You've spoken about it in the past, but it's always good to revisit that because of the changing nature of how business is and maybe your plans, if they have changed a little bit. Just fill us in on that.
So it's a big acquisition which we announced, 1.75 gigawatt. So it increases our capacity immediately by 40%. In addition to what we are doing on organically, we are adding up 2.5 gigawatt, and we have created some more pipeline going forward. And we have a visibility of 10 gigawatt, which we talked about by FY25. We have already logged in, and we are expecting that in next 12 to 18 months time frame, we will be 10 gigawatt. But our appetite is still plenty, and then we are looking at some more opportunities. And I still continue to believe that there will be many more things which we will be doing to grow the business inorganically. And also we are looking at various other opportunities, like storage solution is one where we have already started with a new tender which we have won for lithium-ion battery for grid storage solution. So in that direction, and also in the polysilicon direction. So it's going to be quite interesting going forward. You
expect some of these moves, baby steps as it may be in certain cases, to materially become material for you in the very near term, or are these most of these are slightly longer term initiatives, important as they are, but could these be slightly long term initiatives from a financial or a numbers perspective, Prashant?
So storage wise, it will be very quick. Like the first lithium-ion battery storage project, it will become completed within 18 months time frame. And but all these initiatives in 24 to 36 months time frame, they will be very much there on the ground, commissioning, throwing cash, and these are futuristic businesses which are going to change the complete orbit of the company and also the country. Because what we are talking about, this kind of a new economy which India is going to see, is going to put India on a different orbit.
Prashant, I'm intrigued by your answer. Just a follow up here. The traditional power business is one which is anchored as a business which is capital intensive, cash guzzling, fairly unpredictable because the PPAs are locked, but the input costs may or may not be. In certain cases, they are passed, of course, as you said in your case, but if there's merchant demand, then it may not be. And imported thermal coal prices are so varied in most cases. Now you're talking about having newer initiatives, which if not now, then in 5 years' time, become large as a consolidated piece, if not individually. Do they change the way a traditional power company was 5 years ago to what a power company like yours will be as a consolidated entity 5 years hence?
Absolutely, because power so far is a utility business, and it's kind of a commodity product. But what we are talking about, the new age businesses, these are the product and services business. Like, for example, if you look at the storage solution, it's a services business. You are giving power to people. Like today, when you do a long-term purchase agreement, you are producing and selling power as per the contract, and then buyer, whether he has a demand or not, he has the obligation to buy that power and pay you the contracted amount. Whereas in terms of the services with the storage solution, you give power as and when required. So for example, there is a office in Mumbai. He wants to buy the power only morning 9 o'clock to 5 o'clock. You will be able to supply the green power morning 9 to evening 5 with the help of a storage solution with lithium-ion battery storage as well as hydro pump storage. And that's what is the new paradigm shift which is happening. Second thing is that from electron to molecule business, power becomes your raw material. You are going to produce molecules, and then which you will be converting into various applications and various products which will be sold, whether it could be a sustainable aviation fuel, whether it could be a methanol, it could be a high-speed diesel, it could be a polymer, plastic, yarn, synthetic yarn. So anything could be there. So those are the new product. It could be the fertilizer. So it could be the chemical, specialty chemical. So these are the things which are going to open up with the new hydrogen economy.
Okay, well, it'll be interesting to do these conversations along the way, Prashant. Just a couple of quick updates. You were declared L1, but I think as per at least the last information that I had, is still to receive the LOI for the energy storage piece. So is it just a matter of is it pre-functioning that you will get it, if not now, then months time or 2 months time?
Yeah. It's a routine process.
Just that. Yeah. It's a routine process. Fair call. Okay. The other piece which I wanted to ask you, as you look towards the second half, you spelled that maybe the demand might be as per the GDP, and if indeed GDP picks up in FY24, then 1.2 times or however it is, it turns out, demand could grow as well. What is the biggest risk that you see to this piece? Is it the international coal prices for you because of the fact that the conflict is lasted longer than what people envisaged? Or is it something else? What's the biggest risk that you see to, if not the second half, then the next 18 months?
So the biggest challenge which I am seeing, is one is the interest rates, which are hardening. So that's one challenge which I am seeing, and along with that, it is becoming more and more difficult to set up the plants very efficiently at a low cost, because the commodity prices are also elevated. So this is one challenge: interest rate with the high commodity prices, to execute enough capacity in next 24 months time frame. Second challenge which I am seeing is that the geopolitical tensions, because of which the plan to build the enough supply chain in the country, or to import it from the outside India, to which is will be again a big challenge in next 24 months time frame. So that's what these are the two challenges which I see, because of which enough capacity may not be rolled out in the country. Of course, in the first half, we have added 8.3 gigawatt of the capacity, which is the only the renewable capacity which was added up. Our targets are much higher as a country, and higher interest costs, higher commodity prices, and supply chain disruption is going to moderate the capacity addition. And if enough capacity is not added up, and we are seeing higher power demand, then you will be seeing elevated power prices. So this is one challenge. And in any case, you have already talked about the elevated coal prices, because that is directly related with the gas prices. So what we are seeing, there is a moderation of the gas prices in Europe and US recently in last 2 weeks time frame, which has also translated lower thermal coal prices. But if that becomes normalized because of the geopolitical issues and other tensions, then thermal coal prices will also come down, and which will augur well for the power sector.
My final question, Prashant, the first half of your answer, there seems to be no way around it, right? Because these seem to be lasting for the near term, if not the medium term, which is both higher interest rates as well as the import issues because of supply chains or availability of materials. Would that therefore translate into, whenever you or any of your large peers entering into a PPA going ahead, happening at a higher price, because your IRRs for the plants that you're setting up are anyways getting elongated, and therefore the returns need to be higher for you to be able to earn that bare minimum on the cost that you're incurring anyways?
Yeah, so this is a very realistic challenge in front of all the power developers, all the people who have made the bids, assuming lower interest rates and lower commodity prices and lower equipment prices, which is not the case for last 6-12 months. The IRRs will be subdued, and that's where we have been always advocating that one needs to be very cautious when you are participating in the competitive bids, because most of the time we have seen the emotions come at play than the realistic business decision. So that's why this will be a realistic challenge, and that's why I see that the enough capacity will not be rolled out in next 12 to 24 months time frame. There will be a delay in rolling out the capacity.
Key takeaway for me, Prashant, thank you so much for the candor, and all the best for the second half. And of course, to you and your team once again, a very happy new summer.
Thank you. Thank you very much. Thank you, Neeraj.
And the pleasure was entirely ours. Viewers, thanks for tuning in.